Good morning, everyone. Welcome to Prebell with William O'Neill India. My name is Rajashekar Kongari, Equity Research Analyst, part of MarketSmith India team, which manages the model portfolio. Before we go ahead into this podcast, the disclaimer is registration granted by SEBI, membership of BASN, and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investments in securities market are subject to market risk. Read all the related documents carefully before investing. It is very important to understand Nifty's price volume action to gauge the market, how it is placed at the current moment, and also have a view on the market going forward. As you all aware that last 3 to 4 weeks, Nifty has been under selling after making a new all-time high around 26,200 levels. It has been facing profit booking followed by selling pressure. This has caused the index to breach its key moving averages, starting from 21 DMA, followed by 50 DMA, where index has got little support for a period of 6 to 7 trading sessions, but that level has also been breached. Currently, 100 DMA has also been breached by the index. For the last two sessions, it is not able to reclaim the 100 DMA. Historically, 100 DMA has been acted as a very good support for the index. For the last 1 year, if you look at in this period and in this period as well, 100 DMA has reached for a moment, momentarily for a period of 1 or 2 weeks, and then it has been reclaimed in this period, that is October last year. And in the month of May, June, it reached for a period of 1 or 2 trading sessions, and it has been reclaimed within a period of 2 trading sessions. But now, already 3 trading sessions, we have been staying below the 100 DMA. But if the selling persists and if the volume also increases, then we will change the market status to correction. Currently, we are in under pressure because the breach was not on the higher volumes. That is the only concern or only pointer which has caused us to not change the market status to under to correction. But if the volume also increases on the sell side, definitely we will change the market status to correction. Correction is the state of market status from the O'Neill's perspective, where exposure towards the market should be on the minimum side, and the breakouts probability of them successful will also be minimum in the case of correction. From correction to change the market status to confirm the trend, again we would like to see rally attempt followed by a follow through session. To know more about how we change the market status, you can browse through our articles in the website. And on the upside, if the 100 DMA is reclaimed and next level to be reclaimed will be 50 DMA, if those two levels are reclaimed, we might see Nifty trading or trading near all-time highs again. But looking at the positions and the earnings season, macroeconomic indicators, to all these pointers kept in mind, we might see consolidation of the index between 50 and 100 DMAs going forward. Earnings season has been continuing, and there are companies such as JSW Energy has come up with the earnings numbers for the month of September. Revenue for the quarter declined 0.7% year-on-year basis to 3,200 crores of rupees. PAT on the other side was up more than 2.3% to 876 crores of rupees. EBITDA margin saw a contraction of more than 570 basis points to 52%. ITC has given a very good set of numbers. It has beaten consensus estimates. Revenue increased more than 16% year-on-year basis to 19,000 crores of rupees. PAT on the other side was up more than 3% to 5,000 crores of rupees. EBITDA margin has contracted 370 basis points to 32.8%. Next is Aarti Drugs. The revenue for the quarter declined 6.7% to almost 600 crores of rupees. PAT on the other side was down more than 11% to 35 crores of rupees. EBITDA margin has saw a contraction of 70 basis points to 11.2%. PNB Housing, that is Punjab National Bank's arm, housing finance arm, has come up with the numbers. Net interest income for the quarter was up 2.7% to 650 crores of rupees. PAT saw a growth of 22% to 471 crores of rupees. Overall, we are seeing mixed numbers. ITC and PNB has given good set of numbers, whereas JSW and Aarti Drugs have given not so good numbers. So these stocks will be under radar in the today's session, and there are other stocks which are coming up with their numbers for the quarter, and these stocks are expected to be volatile in the today's trading session. For the global cues are not so strong. US markets closed mixed. Dow Jones closed 0.3% lower, whereas S&P and Nasdaq closed 0.2 and 0.7% higher respectively. Asian markets are also trading mixed. Nikkei is trading with a decline of almost 1%, whereas Shanghai and Kospi are trading with a gains of around 0.4 to 0.5%. So global cues are not so strong. We are expecting muted action according to the global cues. Let's see what GIFT Nifty index is indicating about the Nifty stock. GIFT Nifty is trading at 24,400 levels, exactly where Nifty has closed in the yesterday's session as well. So we are expected to see muted opening and muted action throughout the session as well, according to GIFT Nifty and global indices. For the chart of the day, we picked Torrent Power. The stock recently broken out from its flat base, and it is currently trading in the ideal buy range, which is highlighted in the blue territory. It is just 2% from the pivot. The stock is lacking momentum after breakout. This is majorly because of overall weakness in the market, not specific to the stock. If you compare the stock with other stocks within the sector and within the Indian market, you can definitely say that this stock has been resilient because it has not breached its 21 DMA also. Whereas the stocks from the other sectors and within the sector have seen sharp selling. Overall, market has seen sharp selling where stocks breaching their 50 DMAs has also been done. On that front, you can say it's a resilient stock and a leading stock in the current market. Ratings are still intact. EPS is at 72, which is very good. Price strength and ABD rating, which are technical in nature, are exceptionally good. RS line is also from blue dots, indicating strength in the stock. Number of funds section has also seen a very good improvement in the last 4 quarters. Consistently, the company has been able to attract new institutional funds which are getting invested into the stock. Overall, ratings wise and the chart wise, it's a very good stock to consider. Given the market scenario, we are not advising fresh positions, but if you are looking for fresh positions, and definitely can consider this stock and you can keep the stock under radar going forward as well. Thank you for joining today's pre-bill. Have a good trading session.